How do you expect to be profitable if you're not treating your rental property like a business? Most landlords, they look in their account, they see they got money in there, and they think they're fine. But if you're not actually looking at and analyzing your numbers and cash flow, you may not be fine. Look, my name is Chatto, and I've been a landlord for 25 years, and I learned the hard way on a lot of things. And today, I'm going to sit down with you and go over 10 things that you need to be doing in your business, like things you need to put in place for your rental portfolio so that you can actually run it as a business and not like a hobby. The issue is most people have rentals because what? They want to grow their money, they want to build wealth, and they want to make cash flow. And if you want to do that, if that's your goal, right, then you absolutely need to be tracking your money. If you're not tracking your money, you're going to be losing money. You're going to lose your profitability, and you're not going to know exactly where you stand. And you're not going to be able to make small adjustments and tweaks to get your profitability up because you don't know your numbers. And another thing is, I've made this mistake myself. If you have sloppy books, right, it is very, very difficult to go back after the fact and get them cleaned up. It's so much easier to have your books right up front, and you go back and do it, and it can become a big, huge mess. And another place where I see a lot of investors having an issue, especially if they have a couple properties and they're in one LLC, so they're running all those properties through the same account. And just because your bank balance stays the same or is potentially maybe even going up a little bit, you're not going to be able to identify which properties are performing and which ones aren't, right? And being able to know on a property by property basis what your cash flow is, you're going to be able to make those tweaks and adjustments to reduce expenses and increase cash flow. So again, the reason that you own rental property, I would hope, right, is to solidify your retirement, to build wealth, and to grow cash flow. And your profitability is going to tank if you don't know your numbers. So let's jump into the top 10 things that I think you need to be on top of when running your business. So number one, don't commingle funds. I'm sure you've heard people say it, but I can't tell you how many small landlords, especially if they have a property in their own name, use their personal checking account. Now, if the property's in your own name, yes, I get like you have that liability no matter what. So you can go ahead and run it through your personal checking account. But here's the issue, right? If you're anything like me and I look at a transaction from 3 months ago and there is a charge, let's say, for the Home Depot for, I don't know, $150. Was that associated with the property? Was that associated with a little home project I had, something my wife had me do? I can't remember. Maybe you're better than I am, but my memory, once some time passes, is not that good. So if you are mixing income and expenses that are personal with income and expenses that are for your property, you're going to miss stuff. You are going to miss potential expenses that could be write-offs. You're going to miss you're not going to know what your actual income is because that's getting mixed in with everything else. It's just, do not do it that way. It's a complete disaster, number one. Number two, if your property's in an LLC and you're running everything through your personal account, I'm not an attorney, but apparently you don't have too much liability protection when they come in, and what they do is, I think it's called piercing the corporate veil. So you need to be very careful from a liability standpoint that the funds are not commingled. So my suggestion is, if you own the property in your personal name, open up a separate account in your personal name is fine, and keep all the money, all the income, all the expenses for that property in that account. Right now you can track your numbers. Now it's easy. If you own your property in LLC, everything goes through the LLC account. You do not use your personal account. And if you have multiple properties, right, you under that LLC, that's fine, but you need to track it. But you need to not commingle funds for different properties and different LLCs. And I did mention that. So the other piece of it is, I think that's important, is you do at times need to make purchases at the Home Depot, at various locations, at wherever the case may be. You need to go out and you need to make purchases. So what I'm going to suggest is that you have a business debit card. I normally don't like debit cards, But I prefer to use credit cards. But in this context for your business, we use it so rarely. Most of the stuff is written out, a check to a vendor, that type of thing. But you want to have, right, a business debit card for each account, right? So that way, if you are, doing something on your rental property, you use the debit card for that account. So that money comes out of that account and you don't need to account for it later. It's recorded. The other piece of it is, don't use your personal credit card, because just like a personal checking account, if you have all sorts of expenses on this card, number one, you're going to miss expenses that were for the property, and you might just think is personal expenses. Number one, and number two, you're commingling funds again. So don't do that. Don't use a personal credit card. If you really, really want to use a credit card, get a business credit card. And again, if the property is in your personal name and you have one particular card for that property that you use, a credit card that you use for that property, and that's all you use it for, yeah, okay, cool. But you need to really not commingle funds and just keep everything separate. So number two, choose your bookkeeping system. You need to make sure that you have a system to keep your books. I see so many investors that just get receipts and throw them into a shoebox, and at the end of the year they have the shoebox full of receipts, and that's a disaster. You can't function that way. It's high stress come tax time. You need to stay ahead of it and stay organized. Now, some people use spreadsheets, and while I guess that could work, there's a lot of disadvantages to it unless you're like an expert with Excel. So really, I think you need to be willing to spend a few bucks and figure out a better way to do it. If you just have a few properties, 1, 2, 3, you could probably use something like QuickBooks. That right there is going to be able to have something that you can use to keep everything together, keep everything organized in QuickBooks. If you are growing a portfolio and you're looking to go past 1 to 3 properties, you may want to look at something like Buildium, Appfolio, but look at what software you're going to use. Now, this is where it's so important. The software doesn't matter as much as you have to know how to use the software. Huge. You have to know how to use the software, and you need to actually use it on a regular basis. Not like, oh my gosh, it's been 6 months, I haven't looked at my books, let me enter everything into QuickBooks. That's a disaster. I personally screwed up big time. We switched over to a new software, and it's called Appfolio, and I was confused about how it handled the books. It's got it's called trust accounting centric system, and it's not the same as QuickBooks. And there's some different tweaks in thinking when using it, and I didn't know exactly what I was doing. And I had a couple of properties in one LLC, and long story short is I screwed things up big time. And it took me a lot of money, time, effort, and energy to get them all corrected because I didn't take the time to learn how to use the software. I just let me play with this software and figure out, add this, okay. And I learned how to do it myself, and it was a bit of a disaster. So sometimes training, especially on a new software, is well worth it to keep you organized. So next thing I'm going to bring up, number 3, is use your software for everything. We don't have a checkbook. Every single check that we write is generated from our software. So if I need to pay the taxes on a property, I go into my software, I enter a bill, and then I get a check that prints that I can bring down to the town hall to pay my taxes. If every single transaction that I do is the starting point is my software, right? What's going to happen is every single transaction that I do is going to be in the system. So when it comes time to go over my books, they're in there. I'm not hunting and pecking and looking. So it's just very important that if you have a software, you use it as the basis and starting point for every transaction that comes out of your account. Now, still, there are things, so this is number 4, there's still going to be things that come out of your account, but you can't generate through the software, right? If you are at the Home Depot with your debit card, right, you need to buy something, you can't say, oh, wait, let me go back home, put this in my software, and then come back to the Home Depot, right? I get that. So you pay with your debit card, right? Now you have a receipt. You get that receipt before you even leave the register. You write the property, right? Any specific notes, you get your phone. There's an app that I use called Adobe Scan. You take a picture of it, you email it as a PDF to yourself. Here's a little trick. If you have Gmail, you can email it to your email plus receipt at gmail.com. And now that will go into your regular inbox, but you can create a filter so that everything that has plus receipt. So, for example, if your name was John at gmail.com, if that was your email, you would do John plus receipt at gmail.com, and you would easily be able to now send that PDF over to that email address. Gmail will have a filter, see the plus receipt, and you can add, and they can tag it as a receipt, so you can keep everything organized. And then you can have a workflow to get those into that software when you get back home without wondering 3 months later, oh my gosh, what was this receipt from the Home Depot for $25, right? It helps you keep organized. So you got to capture every receipt at the point of purchase. The next big thing is you need to tag every transaction in your software to a property. That's so important. You need to know two things. Basically, for every transaction in your software, you need to know two things. Number one, what's the GL account? AKA, what was it used for? Was it for a snow removal expense? Was it for taxes? Was it for insurance? Right? Because all those things are separate. So you need to know what it was for, the GL account, and then number two, which property it was associated with. And that's how you're going to know, especially if you have a couple of properties within one checking account for one LLC. That's how you're going to know which properties are making money and which properties are potentially bleeding money. Without this, there's no way to know. You're like going to be able to tell, like, okay, how your portfolio is doing as a whole, but that's not enough. You're not going to know which properties are doing well and which ones are underperforming. Now, the next thing that I want to discuss is number 6 is sit down with your CPA and set up that chart of accounts. Like, what are the expense categories that your CPA wants you to have so that when he goes and does when he or she goes and does your taxes, like, everything's there. You have all the maintenance expenses, all the CapEx expenses, appliances get written off a different way, and like everything has a different way of getting written off depending on your situation. So you need to know what GL accounts is called, general ledger accounts. What GL accounts should be set up for your property, for your business that's going to have everything you need for that last one. So you're going to know the property and the GL account. So you don't want to make up a whole bunch of GL accounts without talking to your CPA first, because they're the one who's going to need to do your taxes and have everything set up properly. The next big thing, number 7, is you need to reconcile your accounts monthly. Every month, reconcile your books against the bank statement every single month. Without this, you're not going to be able to catch errors. You're not going to be able to catch money coming out of your account that shouldn't be coming out of your account, things you didn't authorize. And if you're not reconciling, you're not actually keeping your books. You're just recording a bunch of transactions and you're kind of hoping for the best. And again, I said this 3 times. This is the 4th time. Do it monthly. Every single month, reconcile your books. Don't put this off, because if you need to reconcile a whole year's worth of transactions in order to get your taxes done, you're going to be in a world of hurt, and when you find those transactions, you can't remember what they were for. So number 8, and it's obvious, is review your bank account regularly. And when I say review your bank account, don't just look at what your balance is. Look at the transactions that come out, because you may, like I had this actually happen to me. I'm looking at my bank account, and all of a sudden there is a check that came out of my checking account that I didn't write. Like, what is this? Right? And someone got my routing number, got my account number, and made up a fake check and faked my signature and cashed a check. Now, if I wasn't looking at my account regularly, I wouldn't have caught that. And luckily, I was able to catch it in time and stop it and keep my money. It didn't become a big thing. But, and obviously you have to cancel the account and all the drama that comes along with that because it's compromised. But, like, if I wasn't looking at my transactions on a daily basis, I would have missed it, right? I know, like, oh, okay, my balance is normally about here for this LLC, right? And it's easy to look at that balance and not realize, like, oh, wow, this charge came out that I need to be aware of. Like, this is fraudulent. This is not something I did. And it just really, and the other piece of it is, especially if you have other people helping you and you have people kind of doing your books for you and that type of thing, You might see charges coming out and you don't know what they're for. Like, you need to look into that and you need to check it and you need to figure that out. What those charges, you need to know every dollar that's coming in and every dollar that's going out in order to be profitable, because that's what allows you to make changes and adjust your business. Now, the next big thing that I think you should do, number 9, is you should review your cash flow statement every single quarter. Every quarter, you need to look at your cash flow statement for each property. What's cash flow? That's the amount of money came in minus the amount of money you spent, right? And that's going to tell you how you're actually doing, right? Your account balance may go up and down for a variety of factors, and obviously cash flow is a big part of it. But if you're not actually looking at the cash flow and seeing where the money went and seeing what adjustments you might need to make to expenses, right? Seeing where the income came in, see what tenants may not be paying, see what's going on, you're not going to be able to run a business. You need to know your numbers, right, in order to have successful business and have good cash flow. And a lot of bookkeeping softwares will generate this for you. It's not that hard to get, but that's something I definitely recommend doing quarterly. That's at least enough time to, like, oh crap, right? We have this expense that keeps coming out, or we have this particular vendor that's charging too much and we need to kind of figure out what's going on with that. Whatever the case may be, you need to know your numbers. And the last one that I want to leave you with, number 10, while it's a little bit different, is you need to know the laws in your local area about handling security deposits. That's huge. There are a lot of state-specific laws on how to handle security deposits. They vary in every state, and it's not your money. You are now dealing with the tenant's money, right? It's money that the tenant has set aside for repairs, etc., and there's a lot of rules governing that money. So I strongly suggest that you learn those rules and you obey those rules, because when it comes back to bite you, it's really going to come back to bite you. That one's not optional. So here's the big mindset, right? Those are the 10 items. But the big mindset shift that I want you to think about is, if you couldn't take your business and your books, right, and give them to someone so that they can understand it and know what's going on in your business, right, you're not in the right position, right? You cannot just, if you can't hand your books to someone and they can see and understand what's going on in your business, you're not running a business. You can't create wealth. You can't grow your cash flow. So that being said, I know this is a lot, right? I know it seems like a lot, but if you start doing it on your first couple properties, it's going to be easier as you grow. So just go ahead and do this. That being said, I appreciate your hanging out. It's been almost 17 minutes of blah, blah, blah. And I appreciate your hanging out. Like, comment, subscribe, because apparently that helps the algorithm. And go to my website, chatwithchatto.com. On my website, you'll be able to actually book, if you'd like, a chat with Chatto if you want to talk to me. I'd love to discuss helping you grow your business, helping you pick up a couple rental properties, and magnifying your retirement. Also, I have a PDF download that you can have for free that helps you and shows you exactly what you need to do every time you visit your property so nothing gets missed. So I appreciate it, and I look forward to seeing you on the next episode of Chat with Chatto.